year 2012 ended on a positive note. Inflation stood at 7.18%, below the projections by the Reserve Bank of India. Index of industrial production improved in the last 2 months of 2012, thus giving positive sentiments and an upbeat mood. With this, we have 10 insights for 2013 to look for the realty business next year. The economy is expected to recover with the GDP growth rate forecasted at 6.5%. Interest rates will undergo lower revision by about 100 to 150 basis points. This will in turn reduce the home loan rates, facilitating more purchases from end users for residential properties and real estate assets in general. Notable policies concerning real estate are likely to be tabled and instated in 2013. Important policies include the Real Estate Regulatory Bill and the Land Acquisition, Rehabilitation and Resettlement Bill. With these policies in place, the environment for investment will certainly improve, and Indian real estate will get benefited by this improved inflow of international money coming into India. Infrastructure sector received FDI of 2.8 billion US dollars in the financial year 2012. This is a great boost to infrastructure sector, and this FDI constituted 7.7% of the total FDI received by various sectors in India. With this, the city level infrastructure and large scale infrastructure projects are going to get a boost. With up to 100% FDI allowed in built up infrastructure projects under the automatic route, large townships and large real estate projects having significant infrastructure component are going to get a much needed momentum. Infrastructure we expect to perform a lot better with renewed zeal and growth in 2013. From an asset standpoint, we expect the reminiscent trends in office, retail and residential markets shown in 2012 will continue in the year 2013. Supply correction will leave fewer options for occupiers in 2013. With steady demand and existing space filling up, good buildings at good locations will start commanding premium. There will be more offtake than 2012, and we expect a better next year. Post FDI in retail policy revision, domestic as well as international retailers have renewed interest in Indian markets. However, shortage of quality shopping centers will halt their expansion plans. Polarization will continue in retail spaces, and retailers may want to look at standalone or build-to-suit options on popular high streets. On the housing front, mid-range residential units will form the backbone of India's residential real estate market. Sluggishness in sales in the top luxury category and rising input costs making affordable housing a very difficult proposition will make the mid-range housing as the focus area for most of the development. Two emerging areas, healthcare education sector and industrial warehousing sector, are the ones to look forward to in 2013. In industrial and warehousing space, overhauling of the traditional warehousing or godown pattern will take place, and there will be emergence of distribution centers format in India. Allowing FDI in multi-brand retail will increase demand for such spaces, and logistic parks and integrated distribution center development will be the norm of the day for much of 2013. The sunrise sector of health and education will show a lot of promise in the current year. Expansion plans going into tier 2 and tier 3 cities, and also the peri-urban environment will mean significant development happening all around the country. Formats of kindergarten to 12th standard in education, and formats from small nursing homes to super specialty hospitals, both will happen and emerge significantly across the country. Now to the most important element of real estate industry, investments. Most funds who invested in 2005-2006 are nearing their investment horizon and looking for exits. 2013 should give us more exits from these funds. The renewed interest in income yielding stabilized assets will mean that such assets will be traded at premium. However, the shallowness of availability of such assets remains a challenge. From a city level perspective, Tier 1 cities will steadily move from occupier market to neutral market. However, Tier 2 cities still may have to negotiate a period of polarization and reduced demand. They still have at least 12 months to march towards the neutral markets. Overall, 2012 was a much muted year. 2013 promises to be significantly better with more traction, more maturity and more transparency, thus putting India back onto the international real estate map.